John, you've had very strong views with the U.S. Housing crisis and subprime mortgage lending. Maybe you could update us with your views now in the Canadian market.
Well, Mike, if you look at the United States situation, you had a lot of signs in their marketplace that their housing market was overvalued. And at the same time, the Canadian housing market was overvalued by similar measures. But when the Americans had their subprime mortgage meltdown, people bought houses they couldn't afford, financed through securitization. The music stopped, there was no money available, and their housing market crashed. Well, if you look through history, there has never been a soft landing in a real estate market. Normally, people buy and they buy and they buy, and there's leverage involved. So when you have speculators who have borrowed money for rising asset prices, that's not good. So if in Canada, all the houses and condos that we have constructed were owned by people who are going to live in them, we estimate prices should fall 30 to 40% to make them affordable for people. And even at that, there's probably not enough people to buy the houses. The problem now becomes all these foreign investors who have been buying condos and houses. Are they coming to Canada because they want to be Canadians and live with us? No. They're trying to get money out of their home countries because of political turmoil, Iranians, Russians, because the regime could change in China. And they're buying 600 square foot condos as an investment. Well, the cash yield on condos now in the Toronto market is about 2%. If you buy a condo for $600,000, you'll get something in the vicinity of about $12,000 a year. That's $1,000 a month. And that is not very, very good for your investment health. So what we think is going to happen is people say you need a catalyst, rising rates, unemployment. Well, you never know what the catalyst is going to be until afterwards. But if houses are overvalued by 50% and the people who live in them can't afford their own houses, why should the prices be that high? So what we think is going to happen here is housing market is going to settle back at some point. And what does that mean? Well, 30% of our economy is based on housing. If you look at GDP, gross domestic product, the value of all goods and services in the economy, Canada, United States were both spending 3 to 4%. During the credit bubble from 2002 to 2007, we went up to 6, 7%. The Americans had dropped back down to 2 or 3%. We've increased. So the problem now becomes, do we need all these houses? Well, I would suggest two people living in a 4,000 square foot house because they got the biggest mortgage and the biggest house as an investment might have trouble selling it if there's not someone else who wants to have an investment. So how does it happen? When did this happen? We don't know. But one of the reasons we have such a low weight in Canadian financial stocks and people exposed to Canadian consumers, if you have the most levered consumers in the world, they've borrowed the most, they have the least ability to service their debt, at some point things won't work out for them.